Hello, everybody. So it is that time of the year again when we need to start talking about extensions. So today I wanted to briefly describe our firm's stance on extensions and how we handle things. So March 15th is the business deadline for S corps and partnerships, and April 15th is the deadline for individual tax forms 1040. These are soft deadlines. Really what I tell people is these were deadlines arbitrarily set by the IRS so that they could then set deadlines for when W-2s and 1099s need to be filed by companies, by businesses. These are soft deadlines. March 15th, the deadline, there's typically no tax due if you're a pass-through entity, a partnership or an S corp. There is no federal tax due. There might be some state taxes due because of that pass-through entity tax. Some states have set deadlines of April 15th. Some states have set deadlines of March 15th for those payments. Then April 15th, your taxes are actually due for your federal income taxes. We take the stance that we don't like to work 80-hour weeks and burn ourselves out during tax season. For the same reason you don't want a surgeon doing surgery on you that's been awake for 24 hours. It results in not the best product or the best work. So the way we handle tax season is as it comes in, we do first in, first out. We work our normal hours with the idea that we're going to extend everybody and work on them throughout the year. That way, everybody gets the same attention. Everybody gets fresh minds that are capable of doing a better job and applying our tax strategies and tax code appropriately to all projects. So that's kind of our firm stance. We just plan to extend everyone. If you got your stuff in earlier in the year, then you might get filed before the deadlines, the soft deadlines. If not, it's no big deal. We're just going to automatically file extensions for everyone. Now I've done other videos on making estimated tax payments and payment plans with the IRS and talking about interest rates and everything. So I'm not going to fully readdress that here, but I do want to describe, the three penalties that you kind of get. So the first one is if you don't prepay your taxes, you get the failure to pay penalty. So that is basically you're required to make your quarterly estimated tax payments, or you have withholding on a W-2, and you prepay your taxes. Basically, that's like the utility company coming in the year before saying, we estimate you're going to use $50,000 worth of electricity, so we want you to pay that now. Then after the year, the electric company comes back and says, oh, you actually use $60,000 of electricity, so you owe us another $10,000 with interest and penalties on that $10,000. Or they come back and say, oh, congratulations, you used $40,000 of electricity, so we're going to refund you that $10,000, but we're not yet giving you any interest for that. It's the most ridiculous program there is. Really, it comes to time value of money, and I recommend you watch my other YouTube video on making quarterly estimated tax payments and why you're better off not giving it to the government early and using it for you and investing it or making money on it yourself. But that is the first penalty. It's the failure to pay penalty. We can't get you out of that penalty if you don't prepay your taxes. That is just an interest rate. You will owe that. Then after April 15th, when your taxes are actually due, then you start accruing what the IRS would then call interest. So again, it's an interest rate, just like it's probably the cheapest interest rate you'll ever have because the IRS's interest rate is prime plus 2 percentage points. So prime is the basically, not exactly, but basically the rate that the Federal Reserve loans money to banks. So that's how much banks are paying to borrow money. So then they loan out any money to anyone else at a higher rate so that they make money on that money. So credit cards are more expensive, auto loans are more expensive. long-term debt, such as a mortgage, is more expensive. Everything's more expensive than what the IRS is going to charge. So just keep that in mind. That's the interest. And then there's typically a failure to file penalty. That one, or I guess before that, I can't eat you out of interest either. It is what it is. If you don't pay by April 15th, you owe the interest. So keep that in mind. So if you want to pay something on April 15th, great. I can give you kind of a ballpark based on what your income says in QuickBooks or your financial records. It's one of the reasons why it's good to keep good accounting records, because then you can ballpark what you're gonna owe. Then the last one is the failure to file penalty. That one's very easy to get people out of. Typically that happens because the IRS is broken. So we file extensions. We file everybody on time. If we file an extension, the due date becomes September 15th for corporations and October 15th for 1040s or individual taxes. Those are the hard deadlines. Typically, if the IRS is broken, they don't process the extension for whatever reason. It's happened a lot. You'll get a failure to file penalty. We don't calculate that. We don't add it into your taxes. That way you get a nasty gram from the IRS that says you owe this failure to file penalty. It's usually pretty easy to get forgiven. So we don't calculate it or tell you to pay it. So those are the three things. And that's our stance. We do plan to extend everybody if you haven't already been filed. And just keep in mind that there might be some interest or some failure to pay penalties associated with you not prepaying the government or you not paying by April 15th. Again, I don't ever recommend doing that. What I do for myself is I wait until I file my business return on September 15th, usually around 11 o'clock at night. It's one of the last ones I file. And then I do the same thing for my 1040. I file it around 11 o'clock on October 15th. It's the last one I file. Then I get the first nasty gram usually in December. That's when I start paying my taxes. There's going to be failure to file penalties. There's going to be interest associated with that, but my money is my tax money sitting in an investment account making capital gains, interest, and dividends at a greater rate than the IRS will ever charge me on that tax. So the only reason why I ever pay my taxes is because I could eventually end up in jail if I don't. Otherwise, I would always leave it in the stock market or in investment accounts and continue to make money on my taxes. So that's kind of my stance. And that is why we extend everybody. We're not trying to burn our brains out right now getting all the taxes done, right? Like I'm sure there's firms out there that have more or less staff than I do, and they've probably filed the triple number of taxes by this point in the year. But we do that for a reason. We do it because we don't want to mess things up. We want to file a good product that doesn't require us to amend later because we were too tired and we missed stuff. So that's why we do it that way. I hope this is beneficial for everyone to understand like our process and what we're doing. We do, I guess there's one more thing. We do have some priorities. So if somebody sends us their stuff and says, hey, I'm trying to get approved for a mortgage, or they work for the government or something, if there is an outside factor why they need their tax return prioritized, then we'll do that. Otherwise, we just work on first in, first out. But we do typically it's people who are trying to buy a home and they need to get a mortgage. Well, they have to show their taxes to get the mortgage. That policy affects everyone because everyone buys a home at some point. So it might not be you this year, and somebody else might get bumped to the head of the line this year over you. But then next year you might be the one trying to buy a home and get a mortgage, and then you'll be bumped to the front of the line. So that policy affects everyone. At some point, you're the beneficiary of that policy. But that's our policy. It's first in, first out. We plan to extend everyone. We have been getting tax returns filed, not as much as your typical accounting firm, and we prioritize people based on if they have some external factor that warrants them to be bumped to the front of the line. But taxes are still due April 15th. Otherwise, you start getting penalties or you start getting interest. If you want to pay to save that interest, then you can make an estimated payment. you can reach out to me and we can come up with an estimated amount that you should pay. Thank you. Hope this is beneficial for everybody. Have a wonderful weekend.